Welcome to Coleman Report Live. I'm Bob Coleman, and we're talking Main Street and the small business lender who helps it grow. Officially Dog Day Summer Edition. But actually, some kids are back in school, including our favorite grad student, Delaney. Congratulations, Delaney. I know you're somewhere in the ether. But Lance, what is, Delaney, hop on. You don't have to just voice over. Tell us what you're studying in grad school. What are you studying?
I'm studying forensic linguistics.
And what?
Just trying to figure out what you're doing.
I'm a smart person. I have no idea what that is.
Ultimately, I will perform language analysis on written and recorded documents typically pertaining to criminal activities. So hopefully I can use some of my education when I talk about fraud here.
Good for you. So what career path? FBI, Homeland Security?
Yeah, it's typically one of those government agencies, but I think you can be somewhat of a contractor or, you know, a reference for courts and trials.
We're very proud of you. And what school are you going to?
They just changed the name, so it's Penn West in California. Don't be tricked, though. It's California, the city in Pennsylvania.
Very good. Well, Dad, you must be very proud of her, so good for...
Very excited. Very excited.
All right, good for you, Delaney. But we look forward to having you for a while. You're not going to leave us. I assume you're going to be with us for another year or so.
Yeah, you can't get rid of me quite yet.
All right, very good. We'll get you on camera next time. Hey, Lance, let's get into the news of the day. This came from Bloomberg. We've talked about it before, and Bloomberg's getting into this. And the quote there from the Inspector General, outstanding loan forgiveness applications are a potential indicator of fraud. Lance, how does that work? Why would he say that?
I don't know that that's necessarily the case.
Yeah.
You know, when I look at these numbers, I wonder if there's a forgiveness platform that's broken. And I wonder how many of these are not working well for the borrowers. And I also wonder how many of these lenders are participating in the SBA's direct forgiveness platform. And my guess is that probably not that many. I know the bigger banks like JP Morgan and Bank of America did not participate in the direct forgiveness platform, probably Wells Fargo. I'm just speculating, but you know, you see a number of larger institutions represented on this list, and you know, most institutions, like we're at 98.5% of our 2020, and the only thing that's left over are a few people that have filed appeals, some that SBA's had under review forever, which it's not supposed to take forever, but it has. But it's, you know, in particular, Cabbage's 34.3% would indicate, you know, it's got to be a problem with the forgiveness platform. But I don't necessarily agree that them having a large number of 2020s remaining is an immediate indicator of fraud.
Well, I know that we've reported in the past that several of these institutions built the infrastructure to have their own platform, and management has said, hey, we put all this money into it, we're going to use it. Well, they may want to rethink that, Lance.
Well, I'm just here to tell you the SBA forgiveness platform was built with input from SBA PPP lenders. It was built with input with borrower participation as well. So, I mean, the direct forgiveness platform has worked extremely well for those that have used it. And I also speculate that they're not doing a good enough, or at least speculate that maybe they're not communicating the need to get the forgiveness taken care of. Most of these 2020 loans, if they didn't extend the maturity, Bob, have already matured. And one thing a lender has to be particularly concerned with, if a loan's matured, it's just like a regular SBA loan within 180 days, even on a PPP loan. My understanding is 180 days after the maturity, if it's not extended, the maturity is not extended, then they have the potential to lose the SBA guarantee here.
Yeah. And obviously these institutions, looking at the data, since as of July 2021, I don't know why Bloomberg would publish old data, but we'll go with it. It's probably still indicative. I mean, we've had other reports like this. So, but Cross
Yeah,
River,
and that, I completely agree with that, Bob. You know, surely since last July, I mean, it's been more than a year. Surely those numbers have changed, and I wonder if that's a typo on their part, July 2021 versus July 2022.
But the numbers still, I mean, this is consistent. There's Cabbage has always been up there in the other larger lenders. I know there is obviously, if you had to guess, I'd like that Delaney's reported. What is the average? Maybe Delaney, you can hop in. What is the average forgiveness by institution? We're at 98. I know it's over 98%. I don't know the exact number.
Are you talking about from SBA data?
Yeah, for 2020.
I believe you're correct. It's about 95 to 98. I haven't checked the most recent report.
Yeah,
so I'll have to do that.
Well, and that's what it should be on 2020 now. On 2021, of course, there's still several months worth of work to work through. Many of those loans are just now coming due for payments and getting statements, and may potentially either become a paying loan or one that's submitted for guaranteed purchase. So
I like this interesting chart from 20. And there's Lance, I know you could go for an hour on that. Fortunately, I won't let them. Don't worry about it. But we have large commercial banks dove in terms of the loans. Fintechs rose quickly, and the community banks, either the banks pretty well stayed the same. And SBA's pointed in, they've telegraphed that they believe that a lot of those 2021 fraud came in that fintech line. So that's, I've not seen the chart presented that way, but that's a very, fintechs were the largest PPP funders in 2021.
Well, and I think 2021, anybody who's worked forgiveness and servicing, underwriting, it doesn't matter what part of PPP you work. As a whole, it was a different set of customers than 2020.
Right.
And as a result of that, and it was as a result of SBA wanting and Treasury and our Congress wanting to reach the underserved markets. And certainly one of the best ways to do that is utilizing CDFIs and fintechs were a great way to get more loans out. But in terms of fraud, you know, most of your large commercial banks were doing PPP loans for existing customers. And so there was an element of fraud in 2020, but in 2021, a lot of PPP loans were done by organizations that didn't necessarily have the funding. They would process the PPP application and then put it out for other institutions to potentially fund and service. So
what I like, Lance, is this is 2020. Fewer than 10 employees got 42% of the loans. And then Joseph, go to the next slide. For no, there's another pie chart for 2021 PPP.
Yeah, give me 1 second.
Anyway, it's fewer than 10 employees. It bumped up from 42% to 51%. So on these numbers, the funds went where they were supposed to, which is those smaller businesses. If I did my 85% went to businesses with less than 30 employees, which obviously is a lot. And that's pretty well consistent also with 2020, but there was a little bit more of a skew for the smaller businesses. And when you say less than 10, also a lot of 1 and 2 person companies. So
yeah, I would venture to say that I don't know what the percentages are, but in 2021, there was a huge number of single person Schedule C filing small businesses that got PPP financing. I'm not surprised. a lot of taxi services, Uber drivers, delivery services like Grubhub drivers, and got PPP loans, beauty salons.
Those people were hammered. Those people were hammered. Joseph, go ahead and go back to the previous slide now. And this is in terms of the industries that received it. I think beauty salons are number one. There we go. Yeah, the beauty salons gained the most, but they had the average loan size of $17,000. But hey, for these $17,000 could be the difference between being being on the street and having a house, Lance.
Yeah, absolutely. Absolutely. I think the number that really interests me, Bob, is the number of farming operations that got PPP loans in 2021 represented the third largest category by business type of PPP loans in 2021.
Well, I would not have guessed this. Beauty salons one, taxis two, which include all the Ubers and Lyfts, farming, then restaurants are there, lawyers, and we've talked a lot about religious organizations, but they're way down the list on taking these type of loans. And this is interesting. CDFIs did a much better job reporting on diversity buckets than large banks did, but again, that's part of the CDFI mission. So that's what. But fascinating stats, Lance, and I think we need to put these all in context because all that we're hearing is fraud, 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 and after a while, that drumbeat is going to be very detrimental, especially, and Lance, you and I've talked about this, guess what? Things go in cycles. When we talked about this, there will be another economic downturn, 5-6 years, we've been preaching that, and guess what? Yeah, we're in 2022, and sometime in the future, we'll get through this one, we always do, and there will be another economic downturn. And I hope this does not skew the government's response when that future event happens.
And I don't think it will, Bob. I think the federal government is real good about rolling out programs that happened before that work. And when you look at what the objective of PPP was, which was to keep people employed, all you have to do is look at the unemployment rates over the past, shortly after COVID, the unemployment rate started trending in the right direction. And I think PPP is why.
No, absolutely. Let's see. Lance, we have a question, and the question is, does the lender need to increase payments each time the rates go up? I assume we say mortgage payment. I assume we mean the payment on...
Yeah. Well, I think you want to use prudent lending practices. Some people just re-amortize the loan once annually, but in a rising rate environment like this, I tend to believe it's proper to re-amortize and adjust the payment when the rate goes up. You don't want to have like 3 or 4 rate increases and then all of a sudden re-amortize the payment and they have a huge increase. So, I think it relies on prudent lending practices, but I would encourage you when you make that quarterly interest rate adjustment upward, go ahead and re-amortize and provide the new payment to that borrower.
And I think now the SOP is pretty flexible on how you want to do it, but I believe what Lance described is the industry standard.
Well,
just go ahead.
The SOP doesn't really speak specifically to re-amortizing the loan on a quarterly basis. However, we were in an environment for many, many years when the rate didn't change, so we didn't have to worry about this. Now we've had multiple rate increases in a single year, so adjusting quarterly is going to be a little less. It doesn't, in the scheme of things, make a huge difference, Bob, but it does make a huge difference. It gradually increases that payment for the borrower and gives them some time to figure out how to make sure and make that SBA.
But my follow-up question to you, Lance, is my commercial portfolio is on those that are tied to prime. We adjust the rate immediately the next day. We adjust the prime rate. Can we do that with SBA loans?
Yeah, it depends on the language in your SBA or authorization and note and what the change period is. I mean, you could have a daily adjust in an SBA note. I haven't seen that frequently, especially on loans that are sold in the secondary market. Most of your loans sold in the secondary market are quarterly adjust.
And that's the key. If you're holding them in portfolio, you can choose to change the rate when they're daily. However, if you want to sell it to the secondary market, you must change. I shouldn't say must, but to get the maximum premium, you need to adjust that premium on a quarterly basis. Absolutely.
Yeah, you can adjust monthly if sold in the secondary market, but for whatever reason, the secondary market likes a quarterly adjust more.
Yeah, yeah, and you will, if you anything that deviates will reduce the premium on that.
Yeah.
Structuring the loan up front, it can be critical to your bottom line. Russell says, I have a potential business acquisition loan that will be an asset purchase. God, I can't talk, Liz. Acquisition. The bank is requiring an SBA guarantee due to lack of collateral and longer maturity required than bank policy. My question is, if we obtain the SBA Express guarantee, does the business valuation that will be required need to be received and reviewed prior to closing?
Your business valuation on a delegated loan has to be received before disbursement. However, you do need to go ahead and I would require the business valuation before closing because there are some SOP language that impacts. For instance, the loan amount cannot exceed the business valuation amount. So
Lance, let me play devil's advocate. SBA Express says, SBA says I can use my own lending standards, and we don't get business valuations at our institution. Do we need to get, and let's say the loan's $350,000. Do we need to get one for the Express loan?
The SBA, Bob, you ask a great question.
I know I do.
SBA Express loan does let you use prudent lending standards, which means you use the same standards to underwrite the loan that you would use on a similar sized non-SBA loan. But the answer to your question, Bob, is yes, I would get a business valuation on that, even if it were just an internal business valuation, which is allowed on SBA business valuation loans under typically in the Express loan range.
Yeah, if you're a larger bank, you have someone at your institution that can do that. But smaller ones, you can do it yourself. You can have an intern do it, and there are resources online that help establish those valuations. So it doesn't have to be an expensive process.
I'm going to encourage them, Bob, to get a business valuation and meet the SOP requirements for business valuations, irregardless of whether it's Express, PLP, or GP submission. The timing of submission of the valuation is important. And this doesn't come, Russell, from being a loan originator, which I've been in every function, but it comes from being someone who's worked a lot of guarantee purchases. I would want that business valuation to support my effort to get a guaranteed purchase several years down the road if the loan defaults. So,
very good. Yeah, it's prudent. It's safe. Most
Express loans, Bob, will be of the size that will allow for an internal valuation.
Right. Lance, give me a 30-second elevator pitch why I need to send my staff. Why do I need to attend your equity injection webinar?
Well, equity injection is such an important part of getting the guarantee paid. If you have an early default loan and you've not properly documented the source of the equity injection, the actual equity injection itself, the SOP states that that can be deemed the cause for the business failure, thus your SBA guarantee purchase will be denied. So having good knowledge on how to properly document an equity injection, how to document what a proper source is, and how to document the actual injection itself is critically important. So you guys need to sign up.
my two takeaways are, it is the number one reason for a guarantee denial. And number two, the reason why this is so important is SBA has separate rules that must be followed that banks, credit unions, CDFIs do not follow on conventional equity injection. So they have several steps, and that's why you need to be aware of that. Hey, I just personal note, thank you so much for attending. Our numbers keep on going up even during the dog days of summer. Lance and I are very appreciative of that. We enjoy doing what we do for the industry, and I don't think we say that enough. Thank you very much for supporting us. And thank you all for joining us today for Coleman Report Live and for supporting America's Main Street, one entrepreneur at a time.
Have a great day.
Thank you for joining us today for today's episode. If you like today's content, hit that subscribe button to subscribe to our channel and click that bell icon to get notified about our latest videos. Thank you again for joining us today and for supporting America's Main Street, one entrepreneur at a time. Catch you next time.